Okay, so my screen is visible. Imran, if you are still unable to view my screen, I would request you to please rejoin the session. Okay. Well, hello everyone. Assalamu alaikum to everyone. I hope every one of you is doing great. Every one of you is preparing your heart out for this AAA examination. I'm your tutor, Munir Muhammad Shafi, and we were discussing very important learning objective, which is professional and ethical consideration. Okay, so today we will be continuing our discussion. We will be continuing our all important discussions about this very important learning objective. And today we'll also be discussing about the ACCA Study Hub, the very new feature now available for the student, a very useful feature now available for the students. We'll be having a look at it. How are we going to cover those resources? How will we be discussing those resources? How are you going to prepare through those resources? So the discussion will be very important. So continuing our discussion, a quick recap of what we were discussing. Professional and ethical consideration. This learning objective is very important, as I already emphasized a lot. There are three broad areas in this learning objective: code of ethics for professional accountants, fraud and error, the discussion about the fraud and error, and professional liability concerns. We discussed about the 5 fundamental principles of ACCA code: integrity, objectivity, professional competence, confidentiality, and professional behavior. Integrity, being honest, being fair in your dealing, being open, being truthful. Objectivity, free from biasness, free from any sort of pressure, free from any sort of influence. Professional competence ensures that you have the sufficient enough technical skills, knowledge, and experience to conduct whatever services you are performing or providing to your clients. Confidentiality, whatever information you are gathering or gaining during your professional relationship is very confidential. It's not to disclose with anyone else. Professional behavior, being a responsible chartered accountant, being a person who's carrying out such a trustworthy responsibility. Your behavior should be very much reflective of the professional standards. Okay, be it ethical codes, be it local legislations, guidelines which are regulating your behavior, most of the time relating to your behavior, relating to ethics, you have to comply with those legislations. Then we discussed about these threats. We started discussing about these threats: self-interest threat, self-review threat, familiarity, advocacy, intimidation, management. We started the discussion. We almost discussed this self-interest threat. We discussed various cases, fee dependency. What is self-interest threat? If my interest is involved, for example, if I am the auditor, if my self-interest is involved, then obviously this this self-interest is very significant, then obviously this could be a hindrance, this could be a hitch in performing my duty objectively. For example, if I find any misstatement, then I might be reluctant to disclose this to the client, to get it rectified, with a view that client might get angry, the client might not like it, I might lose this assignment. Fee dependency, I'm very much dependent on that client. And obviously, I might ignore any misstatement. I might not be willing to communicate any adjustment or misstatement, which may be upsetting the client or which may be damaging my relationship with the client. Okay. Gifts and hospitality, we have already discussed this. Gifts and hospitality. If the act of hospitality is inconsequential, if it's a normal gesture of goodwill, then that's not an issue. But suppose if the act of hospitality is a very generous one, then there are certainly big concerns. For example, paid world tour or paid world holiday trip to the partner. It's a very significant trip. Getting? For example, the partner is using the private jet of the client to move here and there. That's obviously a very generous act of hospitality from the client. Are you getting this? If the act of hospitality is in the normal course of business, if it's inconsequential, for example, if the client is offering discount to all of his employees, for example, 10% discount, and if they are providing that 10% discount to the auditor as well, not a big deal, not a big issue. For example, if they're providing lunch as a gesture of goodwill to the auditor, not a big deal. It may be a customary thing. That's not a big thing. That's not a big issue. That might not create a threat. Okay. Owning shares in financial interest, we already discussed. If our stake of if our investment is involved, so we'll be reluctant in proposing any adjustment which may bring its value down. Loans and guarantees, obviously, if these are out of commercial terms, if these are not on normal terms or not on commercial terms, suppose if our client is a bank even, and if we have taken a loan not on commercial terms, on favorable terms, then obviously we might not be willing to upset our client. Business relationships, we discussed this. Business relationship, if in the normal course of business, yes, we can purchase goods, we can have business relationship. But if these are not on commercial terms, if that's a specific arrangement, a specific joint venture business relationship, then again, we might not be willing to upset our partner by identifying their misstatements. Potential employment, we already discussed this, that if a member is in the potential employment negotiation, if he's looking at his prospective job with the client, he might not be willing to go against the client. Overdue fee, so we consider it a loan, and we might be acting so nice with the client so that we recover our outstanding amount. Contingent fee dependent on profits or revenues, that creates a very significant threat. It's not allowed for audits. Okay. And for non-audits, we discussed that is prohibited if fees material or outcome is dependent on future judgment relating to material amount of financial statements. If it's so material, otherwise, if it's relating to any material judgment relating to financial system, I also gave examples in that lecture. If you have missed, please go through that lecture. Compensation, evaluation, and cross-selling. If I'm cross-selling the services of my firm, then obviously I will need to be very much nicer to the client, which again makes my objectivity questionable. So this compensation and evaluation on cross-selling is not allowed for audit partner. Familiarity threat due to the relationship, for example, if you know the client for so long, our relationship becomes sympathetic or trusting. We lose professional skepticism. Our professional skepticism is compromised. Critical thinking, questioning attitude, questioning mind. If that is compromised, then this is the biggest, the biggest arms or emanation for an auditor. If the professional skepticism has been compromised, then what's left? That's the biggest thing. Okay. Where the relationship between the auditor and client goes beyond professional boundaries. And we looked at the example, if there's a long association of senior personnel, then that senior personnel starts to believe everything prima facie, starts to rely on evidences without questioning the client anymore. I have seen this client for years. I know this client for years. They will not be doing any hanky-panky. So he starts accepting everything on the face of it. Dangerous. We should keep our minds open, our eyes open. Getting? Family, personal relationship. I gave you the example. Suppose if my spouse is acting as the CFO of a client, then I might not be willing to identify, or suppose I may be too trusting. But my spouse is very competent. My spouse is very much able, and there couldn't be any mistake. And here, There is another threat. We will be discussing an intimidation threat. If my spouse is acting as the chief of the client, so I might be intimidated as well to identify the threat. Pressurizing. Okay, if my spouse is acting as a CFO, then my spouse can pressurize, can exert pressure as well. Okay, if you identify my mistake, I'll see you then. I hope you get what I'm trying to say. Intimidating, pressurizing. Okay, so it creates dual threat, not only familiarity threat, intimidation threat. Okay, even if not my spouse, for example, any relative, any close relationship. Okay, then there could be this sort of a hitch between the two. Employment with the audit client. Again, we discussed this case in the self-interest threat. This case is now again in familiarity threat, and we'll see this case again in intimidation threat, because it creates three separate, different, distinct threats. Now, how is that possible? How is that possible? Very simple. Employment with the audit client. Understanding is the key. If you're able to understand, you're able to connect it well, you're able to draft it well. Employment with the audit client. For example, senior team member is under the negotiation with the audit client for the potential employment. The number one, self-interest threat. His interest is involved. His potential employment is at stake. So he will try to be nice as possible to secure his job. Okay? Self-interest is involved because his job, his potential employment is at stake. Familiarity threat. Why these employment negotiations have even started? Because client knows our team member for so long. Our team member knows the client's operations for so long. The relationship are very much trusting. Therefore, this process even started. Don't you think there's a familiarity threat? Too trusting? Professional skepticism might have been compromised. Threat number two. Threat number three, intimidation threat. If these negotiations are under process, client might be in a position to exert significant influence. Okay. If you're trying to be over efficient, if you keep on identifying these mistakes, these misstatements, then we might want to look for another guy, another cooperative guy. You might not be fit for this job. Intimidation, pressurizing. Are you getting this? So this one situation, employment with the audit client, is creating three distinct, separate threats. Is everyone getting this? Is everyone getting this? I need your acknowledgement so that I can get to know that every one of you is awake, listening, active, focused, concentrated. Please acknowledge me. Is this thing clear? Perfectly fine. Great. We were discussing self-review threat. I'm again recapping this very important threat. I'm again discussing this very important threat, self-review threat, where non-audit work is provided to an audit client and is then subject to audit. Usually, this is always the case when you are performing audit plus you are performing non-audit services. Listen to this very carefully, because this is one of the most favorite threat of the examiner. You'll see it at numerous places in questions. When you'll go through the questions, numerous places you'll see this threat. So what situation I told you? If you are the auditor of the client, if you are the auditor of the financial statements, you are auditing the financial statements. And with that responsibility of audit, you get an additional responsibility for any non-audit service. So now what is happening? What is happening? You are performing this non-audit service. For example, you are preparing financial statements, you are bookkeeping, you are providing bookkeeping services, or you are providing internal audit services, or you're providing tax services. Now, whatever you're providing, and here you're auditing. So, as part of the audit, you are reviewing this activity. Because obviously, for example, if you have performed compilation services, you have given bookkeeping services, your firm has given, you means your firm. For example, if I am involved, if my firm is involved, so my firm has provided them bookkeeping services. My team has compiled the financial statements, and now at the year end, my team is reviewing those financial statements as part of the audit process. So don't you think it is as if I'm checking my own work? I have compiled financials, and now as part of the audit, I'm checking my own work. What could be the problem? There could be two problems. There could be two problems. Problem number one, I've mentioned here. Problem number one, I've mentioned here. You might intentionally try to ignore your mistakes. You have identified your mistakes. You have identified your shortcoming, but you will not be willing to disclose your shortcoming. No one wishes to disclose their shortcomings. Why? Because I've done this work, I've taken the fee. If I disclose my own shortcoming, the client might say, you've taken the fee and you've done the wrong work, and now you're identifying it. Your work was substandard. Client might start blaming, whatever the case may be. No one wishes to identify his own weakness. Okay, so I might be intentionally trying to ignore or hide my mistakes, even if identified. And number two, even if my intention is clear, even if I'm a very honest person, if I'm a very honest audit firm, even then, I may not be able to identify my own mistakes. I gave you the example as if you are appearing in exams in an ACCA, your ACCA exam of AAA. And what if ACCA says that every student will check his own AAA exam copy? What will happen? Number one, even if you found out your mistake, you will not be willing to disclose it. It will reduce your marks. Are you getting this? Number two, even if you're honest, even if you are willing to mark your script honestly, but in your eyes, whatever you have done is the best. So somebody with more knowledge, with more experience, with independent eye, if somebody else is having a look at your exam copy or exam script, then the mistakes are likely to be identified. So even if you are honest, you may not be able to identify your own mistakes because your work is perfect in your eyes. An independent review is missing. So this is the reason. These two reasons are there in all these situations, all these 9 situations. And now I'll be fitting these 2 reasons on all these 9 situations. Any could come out. Okay. Where non-audit work is provided to an audit client and is then subject to audit, the auditor will be unlikely. The auditor will be unlikely to admit errors in their own work or may not identify the errors in your work. We've discussed both these issues. Now let us discuss the situations one by one. Accounting, bookkeeping, financial statements preparation. Accounting, bookkeeping, financial statements preparation. Obviously, I'm preparing the financial statements, I'm preparing the books of accounts, and then I myself am auditing the financial statements. Self-review threat, both these problems. Internal audit services. Suppose I'm performing the internal audit services. What is the task of internal auditor? Internal auditor is primarily concerned with control weaknesses, efficiencies to the processes, okay? Risks, weaknesses, control weaknesses, primarily control weaknesses. So suppose if I'm providing internal audit services and as part of my control testing, I identify any problem in my internal audit exercise, self-review threat, okay? Taxations, if I perform tax service for the client and now as a result of audit and reviewing the tax calculations prepared by my own self, prepared by my own firm, self-review threat, okay? Michael, are you trying to say anything? Do you have any question, Michael? Yes, I'm coming on to it. IT services. So taxation services. But if we discuss about tax services, there are multiple aspects. There are multiple aspects. Number one, there could be tax calculations. There could be tax calculations, simple tax calculations. Number two, there could be tax advice. Tax advice. Professional advice. How can you save the tax? What would be the advice? Return preparation. Preparing income tax returns, preparing income tax forms, tax valuations. Here, I might be required. This is not a simple calculation, but this is tax valuation. I'm valuing deferred tax. I'm estimating provisions, taxation provisions. Okay. Or I might be contesting any tax dispute on behalf of the client. I might be contesting their tax case. So simply saying tax services, this terminology, tax services, this itself is a very broader terminology. There could only be non-technical small calculation involved, not that technical, not that subjective. There could be tax advice. There could be return preparation, filling out the form on the basis of the financial statements, tax valuations, valuing tax provisions, which may include judgments, estimates, disputes, contesting tax cases for the client. Is there any issue? Answer is yes and no as well. Well, there is no issue in few of the tax services, which are of very clerical nature. For example, if you're calculating tax, applying percentages, applying relevant percentages, no technical calculation involved, simple calculations are in. This might not create any significant threat. Are you getting it? If you are preparing the return, filling out the tax return, tax form, looking at the figures in the financial statements and you are punching it in the tax forms, it does not create a significant threat. When I say it does not create a significant threat, what do I mean? See, okay, so we left this point, okay, in our previous discussion. So I'm discussing this. Return preparation. What do we do in the return? We pick the figures from the financial statements, we put it into the specified format of the tax authorities, and then we submit it. Okay. That does not create significant threat. Okay, when I say it does not create significant threat, what does that mean? That simply means it will not impact my objectivity that much. And when I say it creates significant threat, significant self-review threat, then what do I mean? And what do I need to do? Then I need to reduce this threat. If it creates a significant threat, I will need to reduce this threat to acceptable level. How? By applying safeguards. And if the threat is not reduced to significant level, to acceptable level, then I might be asked by the code of ethics to drop that service, not to pursue that service, because it is not, the threat is not coming down to acceptable level. The threat is not coming down to acceptable level. Are you getting this? Okay, Imran, for a tax return, there are no separate transactions. Even if the client don't know what are the transactions being reported in the tax return, the same figures. If you have seen the process, return preparation is not a very separate exercise. It's very simple exercise. If the financial statements are audited, if the financial statements are done and dusted, then the tax return simply needs those figures in the returns to be reported usually. So the client might not need to know that what figures are reported even. Are we getting this? And the financials are also attached with the return in most jurisdictions. Here in Pakistan as well. Okay. Well, so it does not create significant threat. If something creates significant threat, then it needs to be reduced to acceptable level as per the code of ethics. And if it could not be reduced to acceptable level, then the code suggests us not to pursue that. Drop that. Are you getting this? So return preparation does not create significant threat. Okay. Simple calculations does not create. Tax valuation, where judgments are involved, it creates significant threat. Getting? Where the significant valuations, judgments are involved, deferred tax calculations are involved, judgments are involved, create significant threat. So whenever there is a significant threat, then we need to reduce it to the acceptable level. And how can we do that? We will see the safeguards. One of the measure is use separate teams. Don't use the same team. Use separate teams for all these self-review threats. One of the common safeguard, use separate teams. Have an additional review. Your audit, you are doing the audit, okay, you are reviewing it, but there's a self-review threat. So have an additional review. Have a review of an additional partner. So the additional review might bring in additional things. So we'll be looking at the safeguards as well. IT services. Now, what kind of IT services? For example, Imran was asking what kind of IT services. Can I give example? See, if you talk about IT services, for example, the client says, okay, Mr. Auditor, you are an auditor and we regard you a lot. Can you provide us any IT system, IT solution? And yes, my firm also provides IT solutions. We need to bring all our operations into the IT solution or IT system which you propose, which you implement. All approvals will be carried out through the IT system. All data entry, bookkeeping, transaction entry will be carried out through that system. So if I am providing IT services, and suppose if there is any issue, if there was any bug in the system, if there was any wrong code in the system due to which the financial reports were misstated, were inaccurate. And now, as a result of my audit, when I'm looking at the reports prepared by my system, when I am noticing the flaw in my services, which I provided to the client, then do you think that I would be willing to identify my own errors? No. Self-review threat. Again, both these problems. Self-review threat. Get it? Great. No management role, although I have discussed this in a previous lecture, but I will again throw some light on it. Valuation services, be it any valuation, be it the valuation of pension obligations, be it the valuation of financial instruments, be it the valuation of property, plant, equipment, or inventory valuations, be it any valuation. If you are the auditor and if you are carrying out the valuation, this is such a thing which surely comes under the review of audit, because the valuations relating to the financial statements elements, the valuation relating to the financial statements element will come what may, will come under your review as auditor by any means. So it creates self-review threat. It creates self-review threats. Are you getting this? Okay. Then it's also mentioned that it creates advocacy threat. Okay, let me also rectify this. Advocate, how it creates advocacy threat. Understanding is the key. Yes, Michael. Think over it. Can anyone tell me how can the valuation services create advocacy threat? Can anyone give any idea? Can anyone think over it? What do you mean by advocacy? Promoting the client's interest, promoting the client's position. Okay, I'll come on to this point again. Once I've discussed the nature of advocacy threat. So I'm leaving it here. I'm not discussing it any further. This point, I'm not discussing it any further. But when I'll be discussing advocacy threat, then I'll come onto this point, and then we will again discuss that how it creates advocacy threat. Okay. Temporary staff assignments. Okay. What do we mean by this? For example, the client wants a staff. Any of their permanent staff might have left. So now, in order to compensate the work loss, the client has requested you, can you please lend me a resource? Can you please assign your staff temporarily? The client might say this. And you might be willing to loan them their staff, to temporarily second your staff there, so their work is not disturbed. So you have temporarily assigned your staff, for example, in the treasury section, the department which values the financial instruments, or the staff which enters the data into the system, which makes data entry. Okay, you have lent your staff who is now supporting them in the data entry, or who is supporting them in valuing the financial instruments. Now, what will happen? Your staff has been involved in the bookkeeping. You have lent your staff to the client, and your staff has entered the data, has prepared the financial statements, have valued the financial instruments. And now the same work is coming for your review as auditor. So temporary staff assignments, their work done at the client is now coming under your review in capacity of an auditor. It will surely create self-review threat. I hope you are getting this crystal clear. Is everyone crystal clear about all these threats? Please confirm me. If you are not clear about these threats, it will be difficult to attempt the exam question, because in the very next class, we'll be attempting few questions. Great. Okay, the next one. So this is done again. This is done. We are now looking at corporate finance services. What do we mean by corporate finance services? Listen to it very carefully. Corporate finance services, for example, if my firm offers corporate finance services, what does that mean? That means that I am offering due diligence services to the clients. Due diligence. For example, a company A wishes to acquire company B. This is company A, the company B, and company A is wishing to acquire company B. Then company A approaches me, dear Mr. Auditor, since you are our auditor, you are auditing our financial statements, we need your help. Can you please support us, assist us, and guide us that whether we should acquire this client or not, whether we should acquire this entity or not. And we, being auditors, will be helping our client out. How? We will review their financials. Whose financials? The target company, the potential target company, whom we are looking to acquire. We will review the results, we will review their financials, we will review the financial analysis, we will review their affairs, and we will then give our opinion to company A. Suppose we say it's a very good company. The financial position is very good. Assets are okay. Financial statements figures are okay. Go for it. This is a good company to acquire. And company A acquires this company. Now, as the company A acquires this company, these two companies are merged, for example. And now we are auditing this merged group. And later on, when we are auditing this group, we came to know a fact that our analysis about this company B was wrong. The figures were fabricated. Position was not good. And we gave wrong suggestion to acquire it. So do you think we will be willing to disclose a wrong analysis later? No. Therefore, it creates self-review threat. Are you getting this? Therefore, it creates self-review threat. Because if we advise, okay, go for it, and later on, when we are auditing the combined financials, we get to know that our advice was wrong, our analysis was wrong, it will create self-review threat. For advocacy, you have to wait for a bit. Okay. Imran has raised a concern that if both entities are our clients, okay, Imran, that will create conflict of interest. we will discuss this, but when we'll be discussing conflict of interest, that will be an additional ethical threat. It will just be coming your way. Okay, so just wait for it. It'll be coming your way shortly. Then the next one, client staff joins audit firm. So this is done. This is done. This is also done. Ninth one. Yes, in case of corporate finance services, there will be advocacy threat. But how? I'll explain you once we have covered this advocacy threat, because we haven't yet discussed this threat. Why it appears, what do we mean by advocacy threat? We have not yet discussed this. Therefore, I am not touching this area now. But after this, I think it'll be the advocacy threat which is coming your way. I think. Let me see. Yeah. Yeah. So after this, we'll be discussing this advocacy threat. Okay. Okay. The last one, client staff joins audit firm. Okay. Now that's the reverse of this. Okay. What we discussed earlier this one, potential employment. What is this? Potential employment means, if we see the time once again, it might be the prayer is time, and we might need to take a break as well. Okay, so we'll be taking a break in a few minutes. Let's complete this and take the break. Potential employment. In this case, in case of potential employment, employee of the firm is under negotiations for potential employment at the client. An employee of the firm, a resource of the firm, a resource of the audit team is willing to move to the client. Here, the case is reverse. Client staff joins audit firm. Reverse case. Client staff is joining audit firm. The reverse case. How it creates self-review threat? Can anyone think and let me know how it creates or why it creates self-review threat? Because this is the question which you need to answer. When you will be drafting your answers in the next session, you will be drafting exam answers. We'll be applying these techniques. So what I'm trying to ask you that can you think that why this creates self-review threat? Can anyone think of it? Any guesses? Michael, very good. If the client staff joins audit firm, for example, think of finance guy. He's doing the finance work. He's doing data entry. He's compiling financial statements. And then he joins audit firm. And as part of the audit team, he's reviewing the financial statements, which he himself has prepared. Let me repeat this. Suppose a finance guy who's working at the client, looking at the finance side, financial reporting side, has prepared financial statements. Later on, he joins audit firm. And as part of audit team, he is now reviewing the financial statements which he himself prepared, being part of the client. So don't you think this creates self-review threat? Yes, it creates self-review threat. Both the problems. He might intentionally ignore the errors because he himself has done this. And number two, he might not be able to identify his own mistakes. Are you getting this? So if you have any question in any of these services in respect of self-review thread, please ask me, please let me know, because we'll be moving on to a break because it's prayers time here in Pakistan. So I'll be offering the prayers. It'll be having 15 minutes break. And any one of you who wish to offer your prayers, please do so. Or any one of you who wish to have a cup of coffee or tea or even dinner, you can have it. And we'll be resuming in 15 to 20 minutes, 15 minutes tentatively. But if there is any question in relation to this slide, please let me know, or else we move on to the break. Great. Welcome back. And we have completed our discussion about self-review threat. Two main elements which you need to understand in each threat, in each case of threat. Number one, which situation creates which threat? It's easier to identify. For example, if audit firm is providing bookkeeping services, it's easy to identify that self-review threat has been created or has arisen. The next thing which you have to write down for every threat is that why is it a self-review threat? Number one, you have mentioned, you have told, you have specified that the situation has created self-review threat. The next thing which you're going to explain, why is it a self-review threat? You need to evaluate why is it a self-review threat? Is it significant? Not significant. Okay. So I'm focusing on why, because every situation is self-explanatory. It creates self-review threat. What we are doing, we are reviewing our own work. We are reviewing our own services, self-review threat. Why? The reason, two reasons. We might intentionally ignore our own errors. We might not be able to identify our own errors without independent review. Moving on to the next threat, which is advocacy threat. Advocacy threat. Now, understand what this threat is all about. Promoting the position of a client or representing them in some way would mean the audit firm is seen to be, say, taking side with the client. Either you are promoting their position or you are representing them in some way, which gives an impression to the outside world that you are taking sides with the client, that you and client are one. You are taking the position. You have to understand your position. Your position, as I earlier gave you the example, your position is similar to a cop who is investigating some affairs. So here, your position is also like a police, like a cop. You are investigating or you are reviewing the financial statements. Not investigating, I'll not use the word investigating, but you are reviewing the financial statements. Are you getting it? You are examining the financial statements. Okay, so you need to be independent. And if any such event occurs, which gives an impression to the outside world that you are taking sides, it is a threat to objectivity. Because when we talk about independence, independence does not only mean the independence of mind, it also means independence of your appearance, your conduct. Okay, so promoting the positions. Now, let us have the examples. Which situations could result in advocacy threat? Which situation you might see in the examination, which gives you a clue that this is an advocacy threat? Number one, representing client in a court case, material to the financial statements. Be it any case, if you are representing your client in a court case, for example, you are a witness You are being presented as a witness in favor of your client. And outside world will see and will assume that since you are acting as expert witness, you are representing them in the court case, you are taking their position, you are taking their sides, you are not independent. It creates advocacy threat. The word came out of the advocacy word is derived from advocate, the lawyer. We use the word advocate for a lawyer. What lawyer does? What is the function of the lawyer? The lawyer takes the side of his client, contests for his client. Similarly, here, if you take the side of your client, if you talk in favor of your client, if you represent them, then it creates advocacy threat. It means that you are taking their side. You and client are one. Your independence is impaired. You're taking their sides. Okay. Number 2, negotiating with banks, tax authorities on client's behalf. Client needs a loan. Client needs a loan, negotiating with banks. Client needs a loan, and you are taking the side of the client. You are going to the bank. You are presenting a report. You are giving an opinion to be given to the bank. We will see later in non-assurance services that your report is prepared with the intention to be produced to the bank. Or you are negotiating with the bank on behalf of the client. So you are representing the client. If you are doing something on behalf of the client, if you're doing negotiations on the behalf of the client, it means that you are taking their side. You are promoting their side. What will you be doing? You'll be going to the bank and you'll be saying, yes, the financial side of the client is too strong. Don't worry, please give them the loan. Their financial side is so strong. We have looked at the figures. We are their auditors. And they have a very strong position. Don't worry. What we're doing, we're representing them, we're advocating them. Creates advocacy threat. Means that we are representing them, we are taking their side, and our objectivity is impaired. We are no more independent. If we are taking their side, we are no more independent. Getting? We are representing them to tax authorities. Tax. If you remember. Tax disputes. If we are contesting their tax disputes, if we are contesting their tax disputes in front of tax authorities, again, we are taking their side in front of tax authorities. We are taking their side in front of tax authorities. Advocacy threat. Getting this? Loan of a personnel from an audit firm to an audit client. What does that mean? Can anyone think how this creates advocacy threat? Anyone? Think of it. What does that mean? Any idea? Any clue? Can anyone think of it? Loan of a personnel from an audit firm to an audit client. Anyone? Any thoughts? Think. Try to think. This subject is an understanding-based subject. It's not a rote learning-based. It's a professional subject. Okay. It's very simple. Loan of a personnel from an audit firm to audit client. Audit firm is loaning a personnel to the audit client. Audit firm is lending a personnel, seconding a personnel to the audit client, seconding a personnel to the audit client. They need a personnel, maybe it's a senior person. The threat becomes significant if it's a senior person. Suppose for a senior position, we are loaning them. Yes, Michael, you got the point. Very good. We are loaning them the personnel, and that personnel will be doing any work, obviously. And whatever work that person will be doing, will be defending that work. And we as a firm will be defending that work. And that person will be doing the work on behalf of the client, acting on behalf of the client, taking decisions on behalf of the client. So since that's our person, we have loaned it. So it means it seems that firm is acting on behalf of the client because he is no one, he's representing our firm. He is representing us. If we have loaned a personnel to the audit client, and if he's doing anything in favor of the client, he's representing the client. It means that I am representing the client. Are you getting this? Is this crystal clear? Advocacy threat. Everyone, please confirm me. Everyone getting this? Your acknowledgement is awaited. Great. Okay. Providing valuation services to an audit client. Valuation services to an audit client. Okay. We saw it earlier, and I was asking to think about it, that why it creates advocacy threat. So now, can anyone think of it? How the provision of valuation services creates advocacy threat? Now, again, the ball is in your court. Think of it. Anyone? Any idea? Anyone? Any idea? Providing valuation services to an audit client. Okay, Imran, good try. Okay. Let me explain you a bit. We are providing valuation services to the client. We are the auditor. And we are providing valuation services to the client. And obviously, our relationship with the client might be very good. That's why they have offered an additional service to us. Dear Mr. Auditor, please provide us the valuation services as well. Getting this? So when we will be providing them valuation services, the client is our audit client. We are providing them valuation services. We are getting a fee for the valuation services. And suppose, for example, the client needs our valuation services because this valuation will be given to bank so that bank can give them a loan. So we know that our client needs a valuation so that they can raise a loan from the bank. And obviously, the bank will give them the loan if the valuation will be favorable. So when we will be providing them valuation services, there is a risk that we will try to value it better in favor of the client. If we are giving them valuation services to raise a loan, it goes without saying that we will basically be helping them out through our valuation. We will be supporting them out through our valuation. We will be advocating their position in terms of the value. Are you getting this? Providing valuation services to the audit client. It should be crystal clear. Okay. Providing tax services to an audit client. It was partially covered when we discussed here tax authorities, negotiating with the tax authorities. Providing tax services, obviously, if we are providing tax services, if we are making calculations, if we are presenting them in front of tax authorities, it creates advocacy threat. The last but not the least, contingent fee. Contingent fee. What does that mean, contingent fee? Again, if our services are based, the fee of our services, the fee of the services which we are providing to the client, if that fee is based or contingent upon measures such as profits, such as revenues, such as profits of the client, such as revenues of the client, what will happen? What will happen? We will try to maximize our fee. And if we try to maximize our fee, we will try everything, every possible thing by which our fee is maximized. And how our fee could be maximized? If the revenue of the client is maximized, if the profit of the client is maximized. So we will be doing everything in favor of the client. We will be thinking for the client that how can their profit be increased? How can their revenue be increased? Because our fee is contingent on their revenue. Another example. For example, the client says that we will provide you the fee for taxation services based on maximum tax saving which you do for us. If you can do maximum tax saving for us, we will be providing you the fee based on the saving which you make for us in terms of tax. So what our objective will be? Our objective will be to constantly think that how can we save the client's tax? How can we manage the client's taxes better? How can we reduce their tax expense? How can we reduce their tax expense? So don't you think we are thinking from client's perspective? We are thinking from client's perspective as if we and client are one, as if we and client, as if we are the management. Sometimes advocacy threat and management threat gets overlapped. In some books, in few books, these two threats are explained as one because there is an overlap. Because in this case, we will be thinking as if we are the client, as if we are the management. We'll be thinking from the management's perspective, how can we have the maximum tax savings? Because our fee is contingent upon the tax savings. Are you getting this? Everything, every thread, crystal clear. Please acknowledge me. And clearly focusing on why is it a threat? Why? This is an advocacy threat. Why is it an advocacy threat? So when I'm explaining why, it obviously satisfies that it is an advocacy threat. Okay. Great. Moving on. So all these 6 done, dusted. Another very interesting threat. Intimidation threat. Now, what do we mean by intimidation threat? What do we mean by intimidation threat? Very simple. Intimidation means pressurizing. Fear factor, pressurizing. Undue influence. Blackmailing, intimidation threat. Getting? So actual pressure or perceived pressure, actual or perceived pressures, within the line pressures. If even they're not directly exerting the pressure, but They are trying to create a perception that you are under pressure from the client, or attempt to exercise undue influence. Undue influence. The client is trying to influence you because they know that they are in a commanding position. They're giving you high fee. You are dependent on the client in terms of maximum assignments. You are doing the 2, 3 assignments. You are deriving a major fee from them. It creates an intimidation threat. Okay. They will be blackmailing you. They'll be influencing you. They'll be threatening you. No, these are not life threats. Okay. So threatening you in professional terms. Okay. Exerting undue professional influence. Create an intimidation threat. Situations. Let us have a look at the situations. Very interesting. Fee dependency. We looked at fee dependency in self-interest threat. Now we are seeing it again in intimidation threat. How? Why? How and why? Can anyone tell you? Can anyone think of it? How fee dependency can result in intimidation threat? Anyone? I just already explained it. Because if you are driving a major fee from a client, it's your self-interest. We already discussed that. The client also knows that you are driving a major fee from them. Client also knows that you are dependent on that bigger client. What the client will do? Client will try to exert undue influence. Yes, Michael. The client will try to exert undue influence. For example, you have identified a misstatement. Take an example. You have identified a material misstatement, a $2 million mistake, or that $2 million mistake is lowering the client's profits, and you are a very honest guy. Self-interest threat is not coming your way. Intimidation threat. Client knows that you are dependent on the client. The client might use these terms, can use these terms. Okay, so this means you are identifying lots of misstatements. I think you're not understanding the way we work. We might be looking for different firm of auditors for the next year. So they're indirectly trying to pressurize you. Okay, we might be looking to change our auditors because you are not very cooperative. Within the lines, beneath the lines, these are the meanings. Are you getting this? So the fee dependency puts the client in a commanding position as well, pressurizing position as well. Okay. Gifts and hospitality. Suppose the client is being very hospitable. Every year, they are providing a world tour, paid world holiday trip to the partner. They are allowing the partner to use the private jet of CEO. And what they can do, suppose if the firm is identifying lots of mistakes, lots of misstatements, the profits is going down. The management may say, the client may say, okay, the paid world tour might not be available from the next year onwards because there are some issues going on. So within the lines, beneath the lines, the client is basically exerting undue influence, pressure that, okay, if you keep on identifying these mistakes, then next year you will not be getting these nice gifts. You will not be allowed to use a private jet. Getting family personal relationships, I already told you. Suppose my spouse is there and the client. And if I identify lots of mistakes, then my spouse can say, okay, see you at home. With these expressions, see you at home. Intimidation threat, okay? Or pressurizing, suppose if not spouse, if any blood relative or any close relative, they can say family relationships. They can say, okay, if you keep on identifying these mistakes, then our relationship will be no more. It will be damaged. These relationships will be damaged. because my job will be at stake. You are, suppose, if my family member is saying to me, you are identifying mistakes, you are identifying misstatements. This is creating a pressure on me that I have done so much mistakes. Our relationships will be at risk. Intimidation threat. Recruitment services. Think of it. How can this create intimidation threat? Anyone? How the recruitment services? Think of it. Think of it. Take time, no issues. Anyone? Think for all these three. How could these create intimidation threat? I guided you about these three. Now, I want you to come up with the reasons how and why these three can create intimidation threats. Michael, you are on track. Recruitment services. Suppose, for example, the firm recruits the senior personnel for the client and he's doing something wrong. He's committing mistakes. He's committing mistakes. Then the client might say, what we can do? You have hired this guy. You have hired this guy. In front of everyone, in front of audit committee, we will say that this firm has hired this guy and he's doing mistakes. What you can do? Pressurizing, pressurizing. So that the firm goes on back foot and don't try to identify lots of mistakes because the firm has hired this guy. Getting intimidation threat, pressurizing, influencing. This is your given guy. This is your provided resource. Employment with an audit client. I already explained this to you. Employment with an audit client. This threat from three perspectives: self-interest threat, familiarity threat, intimidation threat. I already explained you. If there is a potential employment with an audit client for any senior audit resource, the client might be threatening that resource. How? Okay, you are identifying so many mistakes, so many you are trying to get over efficient. This means you might not want this job. We should look for another cooperative guard. Threatening, influencing, threatening, influencing. Getting this? Yes. Litigation between the audit firm and the client. Okay. Suppose there is any dispute between the audit firm and the client. And they're having a court case. And at the same time, auditor as well. Firm is the auditor of the client as well, but they have some dispute going on and they are in the courts. So what the client can do, client can pressurize. Okay, if you keep on identifying the mistakes, if you keep on identifying these mistakes, we'll come hard at you in the court. We'll see you in this case. We'll not spare you in this case. We'll come very hard at you. Are you getting this? Or the audit firm might be indirectly influenced or threatened. If we keep on identifying this mistake, the matter will further worsen, and we might not get our dues, or we might not win over this case. So they are under pressure, intimidation, pressure situation. undue influence from the client. Getting this? So intimidation threat, all these 6 intimidation threats, pressurizing, pressure from the client, actual perceived pressure from the client to do something. Okay. Okay. Then we have management threat. As I told you that in few of the books, advocacy threat and management threat are overlapping. These two are considered as one, but there's a slight difference. Slight difference. We can say, okay, that in management threat, there is an advocacy. We are advocating the client. We are taking their position. We are taking their position. We are acting on behalf of them. In management threat, we will also be acting on behalf of the management. But advocacy threat is usually, this word advocacy is usually used in the situations where you are representing, where you are, for example, in a court case or in front of a bank or in front of tax authority, then we use the word advocacy threat. But suppose if you are in such a role that you're in a management role, you are acting on board of directors of the company. The firm has provided a resource. The firm has loaned a resource who is acting on board of directors of a company, who is taking decisions on behalf of the company, who is taking decisions on behalf of the management. Then we usually say that this creates a management threat. Are you getting this? That the firm is carrying out management function, because this is the task of management, to look at the affairs, to set the directions, to set the goals, to get things done. This is the management function. And if audit firm or any representative of the audit firm is doing this, it means there is a management threat. You are taking the management role. Assuming management responsibilities for an assurance client may also create threats to independence. In some jurisdictions, this is referred to as the management threat. Getting? What could be the situations in the questions, in the exam questions, which may indicate a management threat? Imran, basically, yes, usually this is the case, but this is not a very hard and fast rule, because if you can see the advocacy, they go back to advocacy, providing valuation, okay, loan of a personnel from an audit firm to an audit client. If you are loaning a personnel and that person is taking management decisions, so we can say advocacy threat as well, but it will be more inclined towards the management threat. Okay. So there is a very fine line of difference. Sometimes it overlaps as well. Situations. Setting policies and a strategic decision. If the firm, either the firm has loaned any personnel or the firm itself is setting policies, setting strategic direction, this is the management function. This is a management function. And if you are doing this, this create management threat. That you are becoming management. You and management are becoming one. Hiring or dismissing employees. Again, this is a management task. If you are doing this, it gives an impression that you and management are one. Direction and taking responsibilities for employees' actions. If you are directing their employees, if you are taking the responsibility of the employees' actions, whatever the employees are doing, if you are taking their ownership, you are acting like management threat. Authorizing transactions, if you're authorizing the transactions, if you are approving the transactions, this is the management function. If you are deciding which recommendations, your responsibility as an audit firm, you should give the recommendations. We think this can be done, this can be done, this can be done, this should be done. No, whether to implement it or not, it isn't your domain. It is the domain of the management. So If you are deciding which recommendations to implement and how, that means you're performing a management function. It gives an impression that you and management are one, and your independence is impaired. You are performing management function and it creates management threat. Get it? Reporting to those charged with governance on behalf of the management. You are reporting to those charged with governance. You are reporting to the directors. You are reporting to the audit committee as if you are the management, as if you have the onus of the affairs of the management, as if you are responsible for conducting the affairs of the entity. Okay. Taking responsibility for the preparation and fair presentation of the financial statements. Okay, so unfortunately, taking responsibility for the preparation and fair presentation of the financial statements. This is the responsibility of the management, isn't it? This is the premise of the audit, the basic premise of the audit. Are you getting this? The basic premise of the audit, that management should take the responsibility. Management should take the responsibility of the preparation and fair presentation of the financial statements. But if you are taking this responsibility, then what's the purpose of audit? Then it means that you are not a management. Taking responsibility for designing, implementing, and maintaining internal controls. If you are, we discussed this, where we discussed this, I'm just recalling it. See, internal audit services, not to assume management responsibilities. If we implement controls, if we give the management directions, it means that we are not providing internal audit services only, we are also performing the management role. IT services. If we are providing IT services and we are setting the directions, what to implement, which IT areas to implement, how to implement, we are giving the directions. We are not only providing them IT services, but we are also implementing the policies, procedures, protocols. It means that we are performing management role. Because if we are performing the management role and we are then reviewing this thing, then it creates a self-review threat. But at the same time, it also creates management threat. Both the threats come in. Not only self-review threat, but also management threat. Getting this? So again, it is very closely linked with self-review threat at some points, just like these points. Internal audit services, IT services. Getting this? So taking responsibility for designing, implementing, and maintaining internal controls. So therefore, it is said that for listed entities, internal audit services, you cannot provide internal audit service to a listed entity. You cannot provide IT services relevant to the financial reporting system to a listed entity, to a public interest company. Are you getting this? So therefore, internal audit, there's a very close overlapping. If you're providing internal audit services, it might be seen as if you are providing management services. Okay. So whenever you will see the question and examination and any of these services, you will see the management threat is also identified by the examiner, and the necessary safeguards for the reduction of management threat or avoidance of management threat are also proposed. Getting this? So prohibition. A firm, look at these boxes, prohibition. Let me use the pointer. Prohibition. I'm reading this box. A firm must not assume responsibilities as part of an assurance engagement for an audit client. Must not assume management responsibility, must not assume management responsibility. Management assuming management role is not allowed. And what could be the safeguards? Make it very clear to the management. There are only two major safeguards, and everywhere you will find these two. Every time, if you face this management threat like situation, these are the safeguards. Just keep in your mind and write it down. What are the safeguards? That management makes judgments. Say to management, make it clear to management, dear management, you will make the judgment. We will present your analysis. You are responsible for judgment. You are responsible for a decision. We are not responsible for a decision. We can suggest you. The ultimate decision is your decision. It may result in negative implications, but it's up to you. Assess them, weigh these suggestions, and decide which suggestion is the most important for you. We are not responsible. We will not be responsible. If you make it clear to the management, then no threat. Number two, you should ensure that management is also informed management. For example, we have given two suggestions and we know that management knows nothing about this. And directly or indirectly, management is reliant on us to take the final call, to take the final decision, to set the policy, set the direction, to set the SOP. In this case, even there is a management threat. So there should be informed management. If exam questions give you an indication that management is not aware of these kind of situations, management is not aware of the environmental factors, they have no clue whatsoever, then there will be management threat. Are you getting this? Is this crystal clear to everyone? Dear students, can you please confirm me? I hope I'm able to explain it to you. Great. Many thanks. Okay. Okay, so these two boxes shouldn't be here. Okay. What next? In exam situation, so we have discussed almost all the threats. If in exam scenario, if in exam situations, you are given with an ethical dilemma, ethical threat, and you identify that this is an ethical threat, you have to evaluate it as well. What do we mean by when we say evaluate it? Okay, you identified threat, perfect. You have explained why is it a threat, perfect. But the threat could be significant or it could be less significant. It could be more significant, it could be less significant. What are the factors which make a threat extremely red or which make the threat not that red, not that red hot, but mild hot? Let's see. The assessment of and response to how you act to a threat, how you address a threat, how you respond to a threat will differ. The assessment and response to ethical threats is key consideration for the audit firm. Very important. It is there because obviously it distorts the entire audit process. See how important this is. It will change your behavior. If your objectivity is impaired, your behavior will be changed. You are no more independent. Your opinion is no more reliable. So how important this is? It is therefore critical that you can discuss the significance of a threat and recommend an appropriate safeguard. Okay. If a threat is significant, if it's very significant, you might propose, okay. If it's not that significant, junior is involved, okay, rotate that junior. If threat is very significant, okay, you need to leave the audit. You cannot audit. Or you cannot accept the assignment. If the threat is not that significant, okay, accept the other assignment. If it's self-review threat, have two teams, get it reviewed. If threat is so significant, it's a listed company, so significant, you cannot accept. So you have to decide as per the situation, as per the case given to you in the exams, whether you should proceed with that threat with necessary safeguards or you should not proceed. Are you getting this? Factors affecting the significance of a threat include value. Example, when considering gifts and hospitality, if the value of the gift hospitality is so big, that's a big risk, big threat. It's so low, it's a small threat, less significant. Don't worry that much. Seniority of staff when considering rotation. Suppose if it's a junior working on the client since last 2 years, okay, familiarity threat will arise. But junior will be doing the relatively non-complex tasks, petty tasks, and that those petty areas, those small tasks, those easy tasks, or those non-risky areas will be subject to the review of a senior personnel. If those non-risky areas are reviewed by the senior personnel, then the threat reduces automatically. Getting this? But if suppose the senior manager has been looking at the client since last 5 years, senior manager, threat, familiarity threat, and it's not a small one, it's a big one, because the senior manager is looking at all the judgments and all the review and all supervision. He's directing the assignments. He's directing the engagement, the entire engagement. This is not a small threat, big threat. Impact to the audit firm. Fee dependency. Fee dependency. Suppose if we are dependent and we are deriving 20% fee from a client, situation is different. We are deriving 50% fee from a client. Threat is enlarged. We are deriving 10% fee. It is still a big enough factor, not that big, not that threatening. But suppose if we are deriving 50%, threat is enlarged. Materiality to the financial statements. Any non-audit service which we are providing. Suppose pension obligations, we are valuing pension obligations, and the pension obligations are very small amount. Very small amount. Not a very big threat. But suppose those pension obligations are very big, $10 million, very material to the financial statements. The threat is enlarged. Simple. So when the significance of threat increases, your response to that threat will also change or differ or be more decisive. Are you getting this? It is simple as it is very simple. For example, let me take a very simple example to make it clear to you. Suppose you are going in a jungle. You are going in a jungle. And obviously it's a jungle. It's a forest. And there could be animals, various animals. You can face various animals. Those could be less deadly. Those could be more deadly. You can even face a lion. But you can even face a cat. You can even face a dog. You can even face a deer. And for your safety, for your safeguard, you have different weapons, different accessories. You have a stick. You have a stick. You have a knife. You have a gun. Okay. So, what will you do if you see that a wild cat is coming your way? Will you use the gun? No, wildcat is coming. That's not a big threat. And we can use this stick to hush that cat away. Simple. But suppose if a lion is coming towards you roaring, if a lion is coming your way roaring, what will you do? You use the stick? You use the knife? What will you use? Any ideas? What will you use? You will use the gun. You will outrightly use that gun. So, keeping in view the threat in front of you, you will be using the safeguards. Are you getting this? So, these are the factors which makes the threat deadly or which make the threat not that significant or reduce its significance. Is everyone getting this? Are we on track? Please acknowledge me. Okay, now these are the summary of safeguards. Okay. When we look at the text, we'll be also having we'll also be reviewing the study hub resources which are now made available to you by ACCA. You now have the access of the study hub resources, all the study text, all the chapters, all the technical content, all the question bank, quizzes, flashcards, lots of useful resources. ACC has made available to you, and we'll also be discussing those resources during our lectures. We'll also be making use of those texts during our lectures. Okay, I'll just show you. Summary of safeguards. Obviously, every threat may have their respective safeguards, but we are not here to rote learn all those safeguards. We will see how many safeguards, and we will use our head, we'll use our brain, when to use which safeguard, when to use which safeguard. Okay, let's have a look at this. Summary of safeguards. A firm's independence is threatened if total fee from an audit client. Obviously, this safeguard will be used when there will be significant fee dependence, when there will be the threat for fee dependence, then we will use this safeguard. A firm's independence is threatened if total fee from an audit client exceeds 30% of the firm's total fee for 5 consecutive years. Okay, this is for non-listed clients. There are listed entities, which are also called public interest entities. We are not talking about those public interest entities because we have separate safeguards for public interest entities. I'll be coming on to that. But these are the general safeguards. If the entity is not a listed company, if the group is not a listed group, if the company is not a listed company, if the client is not a bank, is not an insurance company, then these are the safeguards. But suppose if the client is a listed company, then stringent safeguards are there. Then stricter safeguards are there in few cases. In few cases, these are applicable. But in few specific cases, those safeguards are stricter, more stringent. So in the normal cases, these are the safeguards. A firm's independence is threatened, and we know it's threatened if the fee from a client, from a single client, exceeds 30% total fee. Suppose you are providing 3 services: audit services, valuation services, bookkeeping services. Combine these. The total fee is 30% of the firm's total fee for 5 consecutive years. Then what should be done? What is the safeguard? Engagement quality review should be performed. What is that? We'll be looking at this area. A senior partner, just to explain you easily, another senior partner in your firm should review your work, should review the work. Engagement quality review. It could be either a pre-issuance review before you issue the opinion, before you issue the 5th year audit opinion, or post-issuance review. Or if you have issued 5th year audit opinion, then before issuing the 6th year audit opinion, you get it reviewed. It could be a post-issuance review before the 6th year audit period. So if the total fee exceeds 30% of the firm's total revenue, get it reviewed before you issue the 5th audit opinion, or get it reviewed after the 5th one, but before the 6th one. Okay. If the audit staff has been working for so long, obviously it creates familiarity threat. We know it creates familiarity threat. So what's the safeguard? It's very simple. Think of the problem: long length of service. Senior member working for 3 years on the same client. Familiarity threat. What we should do? Rotate him. Remove him from the audit team. Simple. What's the problem? Do away with the problem. Simple, as easy as that. Are you getting this? For example, take very simple. There is a threat that a thief might come and steal these precious belongings. What should be done? Lock the door. Lock the door. Are you getting this? Another example, very simple example, daily life example. You're driving a car on a highway. Unfortunately, there are cases where the car meets an accident and there are severe injuries. What you should do? Use the seatbelt. So thinking of a safeguard is not a very technical area. It's not a very technical thing. It's not a very complex thing. You can simply think of a safeguard. What is the problem? Think of a safeguard which undo that problem. Rotate him. But suppose if the audit partner is serving the same client for the last 7 years, every 7 years, cooling off period for 5 years, is serving for the last 7 years, remove him after 7 years, rotate him after 7 years. In case of listed. After 7 years, should be rotated. If the client is a listed client and your firm is giving services, same partner is giving services, after 7 years, he should be rotated. And he should not be looking at the client. He should not be looking at that engagement for 5 years. And for engagement quality reviewer, he should not be reviewing for the next 3 years. Cooling off period is 3 years. Suppose if you hold financial interest, if you hold financial investment, what should be done? Do not dispose of those shares. Do not allow the shares to be held in the clients. Simple. This is a safeguard. If you are giving non-audit services and it is creating self-review threat, how you can reduce the threat? Use different teams. Don't use the same team. It will reduce the threat because the firm is the same, obviously. Audit firm is the same one. But by using different teams, by using separate teams from separate offices, you may reduce that threat. Management threat. Remind management that they remain responsible for the company's decision. We've already seen this. If asked for a second opinion from a client, refuse to provide an opinion unless allowed to consult with their current auditors. Now, what is this? This happens. Suppose an auditor has proposed treatment, or auditor has identified a wrong treatment of the client. The auditor knows this is the wrong treatment. An auditor is asking to rectify that treatment. Now, what the client sometimes do, I say, okay, we'll take a second opinion. We think that we might need an opinion. We think that we might need to consult a bigger firm because you seem not to understand this issue. Basically, when you are not agreeing with the client, they might try to pressurize you. They might try to pressurize you by saying that, okay, we might resort to a bigger firm. We might resort to a bigger firm for their opinion because you might not seem to have the understanding of this issue. You are, because we believe that you are recommending us the wrong treatment. This is not the treatment. And why they're doing this, they are simply doing this opinion shopping just to increase their profits, because the adjustment of the auditor is reducing their profits and they want to increase their profits. So they are not willing to agree with the auditor and they are trying to shop for the second opinion. So this second opinion also sometimes create intimidation threat, pressure to the auditor. Okay, they are taking second opinion from a bigger firm, pressurize. Therefore, there's a safeguard. If any client comes to you for second opinion, don't give them second opinion. Or if you are giving second opinion, ask the client that you will first of all consult with their existing auditors, and then only you will give the opinion. Are you getting this? Second opinion. No contingent for audits, contingent fees are not allowed. We have already discussed this. Self-review threat. You are doing the non-audit service, and then you are yourself reviewing it in the audit. Get it reviewed independently. Hot reviews, pre-issuance reviews. Before the opinion is issued, you get it reviewed through another partner, by another partner. Getting it is called engagement quality review. It's must in the listed companies, but even if it's not a listed company, you can have an additional review from another partner, because an independent eye might give more assurance or might identify any error, any issue. Due diligence report, can a client request over the audit opinion to any other auditor? I'm not getting what you're trying to say. Second opinion is basically on any specific treatment. It's not an audit over the audit. Once an audit report is issued, you cannot get it audited again to have another audit. It's not usual. But yes, opinions. Opinions are taken from the bigger firms, from different firms. Okay. And yes, there could be a possibility. There could be a possibility that for due diligence, two firms can do the work. The work will be divided. That this area, these two areas, this firm will look at these two areas. These two areas will be looked at by this firm. Due diligence, helping the client to take the decision. Okay. Or listed in public so carry out hot reviews and audit working papers just before audit report is finalized to check the quality and management of audit and check all conclusions have been reached appropriately. So why we are using these safeguards? For self-review threats, obviously. For advocacy threats, we can also use. For intimidation threats, we can also use the safeguards. Getting this? Because we might take wrong decision in pressure situation. In pressure situation, if we may take wrong decision, get it reviewed. Or listed in public interest client, get a second partner to review the analysis of the objectivity threats before the audit work starts. For listed clients, it's necessary that before the audit work starts, an independent partner, another partner gets a second review of all threats to objectivity. He looks at whether the threats have been reduced, eliminated, then only the firm should accept that client. But we have some specific safeguards for listed entities. Public interest entities usually include listed entities, banks, insurance company, or any company of a very big size to which the regulator treat as a public interest entity. So no loans are not allowed. No loans from clients. You cannot take loan from client if you're a listed company, unless your client is a bank and it's under normal terms and conditions. Fee from a listed audit client should not exceed 15% of the audit firm's total revenue for 2 consecutive years. Here, the requirement is different. For listed, the requirement is different. And you have to do engagement quality review before second year audit opinion is issued. This is a compulsory safeguard. Firm must resign after this situation for 5 consecutive years. And if this continues for 5 consecutive years, you have to resign. Okay. No loans from non-banking clients unless immaterial to any staff. Audit staff cannot take loans from a non-bank client. And this is very immaterial. It's not allowed. No involvement in any material figure in financial statements. You cannot provide valuation services, no pension obligation, no valuation for financial instruments, because these are financial statements figures and you cannot provide any services for material financial statements figures. Tax valuations, not allowed. Pension obligations, financial statement, financial instruments obligations, you cannot value, not allowed. No internal audit service if it is linked to FS figures, financial statements figures. So internal audit services is also usually not allowed for listed entities. No design or implementation of any system, no design of implementation of any IT system linked to the financial statements, not allowed for listed entities. Engagement partner gets no bonuses for selling other services, not allowed for listed entities, cross-selling of services. No secondment of a staff to audit client in case of listed, unless client fully directs their work. Usually this is not the case, and it is usually not allowed that you loan your staff, second your staff to a listed entity. So these are specific safeguards for the listed entity. Okay. So we will try to keep our discussion till here. And in the next session, we will continue our discussion. We'll look at a few exam questions. We'll practice few exam questions as well. In the upcoming session, we will be practicing few exam questions as well. And now I'll simply take 5 minutes to skim you through the resources which are available at the Study Hub. We will be making use of those resources in our sessions, in our discussions. So I hope my screen is visible to all of you. Is this the case? Okay. So Study Hub resources are now available to all of you, and you have access to textbook material in digital form, whole syllabus. You have quizzes, you have practice revision questions, and what a platform this is. To practice, to study, to have your course covered, everything. Every learning objective divided into sub-learning objective, and you can simply click on it. For example, money laundering. You click it and you go on to text. It's very easy to navigate. You can also navigate through this. Okay. Simple. Are you getting this? Simply click on it and you get it. You can mark your confidence level. You can take notes, bookmarks, quizzes, practice, complete question bank. You can practice, you can have the solutions. So lots of resources are now available. And we will also be making use of these chapters, these texts during our classes. I'll be asking you to read these areas. We'll be skimming through those areas. We'll be making good use of these summaries. You should also use all these resources for your better coverage. Are you getting this? See, second opinion shopping. We just discussed about second opinions. Okay. Non-assurance services. We discussed about all these services, non-assurance services, management responsibilities, bookkeeping services, valuation services for public interest entities not be provided. So I've summarized things in the slide, but this is the actual text which you should be reading on your own. Internal audit, how this creates the self-view threat. Okay. So keeping it till here, thank you so very much. We'll meet in the upcoming session. That will be on Thursday or Friday. I'll confirm you the day. Probably it's on Thursday, but I'll still confirm you. So thank you so very much. We'll continue our discussion. We'll continue practicing this portion.